in Saudi Arabia, now down in history, the fist bump of all fist bumps. You thought it was maybe, LeBron giving a fist bump to Michael Jordan. No, all of those fist bumps have gone before are nothing compared to the one that we saw this weekend between the President of the United States and the soon-to-be King of Saudi Arabia, Mohammed bin Salman. From our selfish perspective, the question ultimately is, will it bring more oil to the markets? Although I probably think the deal they did around, the Huawei or not Huawei, the 5-6G network, the fact that the Saudis agreed to go with the US and not the Chinese, perhaps in the big wheel of time might be the biggest or amongst the biggest headlines to take away. But Christoph Ruhl, let's start with you this morning and ask you the question, the very selfish question: will this trip to Saudi Arabia bring more oil onto the market after this OPEC agreement expires next month?
Good morning. Maybe marginally so, but maybe also we don't need much more oil in the market the way things are going. So Biden has this talent of he makes himself meeker than he needs to be. He came a bit late probably. He got a promise, as expected, a vague promise of future OPEC plus increases. OPEC plus being so far beyond schedule that this is really not a very meaningful promise. There's an interesting thing which happened there, which has been overlooked, including by myself. A friend of mine just pointed that out, which was the statement of Mohammed bin Salman when he said that Saudi Arabia can increase its productive capacity to 13 million and then that's it. And that all this hindrance of investment and the climate policies which caused it will cause inflation because there won't be more capacity. That is interesting because it does indeed fly in the face of previous Saudi statements when they always had argued that they will increase capacity to 15 and then probably beyond. So here he is saying, on the one hand, yes, OPEC plus will increase a little bit in the short term. But then he clearly said, look, guys, we are producing close to where we be going. We go no more than 13. And then the world, sorry for us, will suffer inflation because there isn't enough oil supply. So that sounded much more belligerent and much more sort of in vein of keeping high prices rather than more oil flowing than all the official statements.
Well, it was certainly useful in terms of when you're always looking for something new, what was said that's something different. And the fact that the Saudis would acknowledge some kind of a ceiling at 13 is certainly helpful. Let's go to Adi Imsirovic, Senior Research Fellow at the Oxford Institute for Energy Studies, on his 1 acre in the beautiful British countryside. Adi, oil prices, regardless of all the dynamics, stuck at around $100. There was a sense that the drop was a bit like rock through water from 120 to 100, but it's held firmly around 100. Your thoughts in review of the week past, will it hold at this point?
Well, yeah, absolutely. Good one. And good morning to everyone. Hi, Sean. Just coming back to Christoph's point, I think it's a reasonably good observation about the Biden visit because, yeah, it's a little bit too late because I think we're already seeing a fair bit of demand destruction in the market. And there might have even surprised quite a few observers. I think we've seen gasoline a month ago. We're over $5. We're going well below $4 right now in the United States per gallon. In Europe, we're seeing US margins are at probably 12-week low overall, sort of so famous 3-2-1 margin. And it's come quite a long way down. Gasoline cracks had come down over 30%, or EURUSD crack in Europe as well, in just 1 week. So I think we're seeing a lot of demand destruction as a result of these higher prices. So maybe the sort of developed world has developed that sort of price sensitivity that sort of places like India and much of Asia was famous for. So that's basically put a lid on the prices, and I think we'll probably definitely mention at greater length the current situation in terms of interest rates and where we're going in terms of inflation. I think at the moment for Biden administration or everyone else in the world, I think high inflation is more of a risk than higher energy prices. If you see what's happening in Sri Lanka, Pakistan, and other places. So I think that this fight against inflation is going to make a big dent on not just oil commodity prices. If you look at copper and other commodities, I think their price has been dented quite a bit. So we've got currently something to discuss here is this tag of war between reasonably still tight market, but tight is a relative term. It depends on obviously demand, and the recession and almost unavoidable recession out there that's going to happen as a result of tightening of the interest rates. Yeah. So what that I think we're going to see more and more volatility in the coming month, in spite of the summer months. And I think the market, one or the other force will win. We'll find out.
Christoph, on that point, last week we saw obviously the oil price break below $100 on Brent. It's since climbed back at the end of the week, but we also saw the euro dollar break par below 100 cents on the US dollar. We also saw the talk after the US inflation print was above 9%, that the 100 basis point, the sort of howitzer of interest rate rises is now on the cards. Your outlook for that sort of collision of those different factors?
So on the macro side, I think overall, I think things are looking up, and tell you why, sort of militarily, energy, but also on the macro side in the middle. On the macro side, I think the Fed did something very right for once, which is precisely to put this 100 basis point increase, so 1 full percentage rate on the table. They got the higher inflation rate. I'm almost certain, in a deliberate attempt of messaging to the market, started talking about probably the possibility of a 1% increase in interest rates, clearly signaling that they want to get inflation under control more than avoiding a recession. And that's exactly what the doctor orders, because markets can deal with that as soon as they think that the Fed is going to be data-driven by getting inflation down and avoiding an unhinging of inflationary expectations to the extent that they're still anchored somewhere. Then people sort of take this in their plan, and you have seen the market reaction was extremely positive the moment it looked as if this may not be necessary. Overall, we should never forget it is much harder to dislodge persistent inflationary expectations than it is to cure a recession once you have high interest rates, and all you need to do is to lower them a little bit. And the Fed has clearly signaled that that is what they do and what they understand. The ECB hangs in the doldrums, is far from it. That explains the dollar moving to parity. But the markets have clearly sort of taken up the ball. Now, let me step back and say two other things. Militarily, you should really, John, you should collect sort of what people have said before about price predictions and keep a tally. Weeks ago, I've sort of tried to point out that the military situation seems to be looking up, and I think this is confirmed now. We get a fresh impetus from the Ukrainian destroying really ammunition dumps and logistical centers of Russians in the Ukraine at a very accelerating pace, and Russia is sort of starting to look very ugly and disparate with these civilian bombings all over the place. And we have already discussed the energy situation, where pressure in the whole commodity price cycle is sort of loosening a little bit. And that all feeds back into better inflationary expectations and supported this kind of Fed policy of saying we're going to be tough if necessary. So that's what I meant. It's brightening up a little bit.
On that point, Christoph, just the headline in the FT over the weekend that recession is better than inflation, and that tackling inflation has to be the priority. Do you agree with that? Do you believe that the Fed and its sort of central bank allies around the world will indeed do, quote unquote, what it takes?
No, you cannot agree with it. This is the newspaper translation, but of fundamental truth. But the truth behind that statement is that a recession is probably, in the current circumstances, easier to fight than inflation, in particular in the US. If inflation gets entrenched, we are in for 2-3 years until when people will ask for higher wages, higher prices, where we have to get rid of this spiral. We are now in a situation where interest rates are just starting to rise. Unemployment is still at record lows. Economic growth is still very high. If you had a recession there, a period of two quarters without growth, that may be quite shallow, and it's not very, very meaningful in terms of economic suffering. So that's what I mean. In this current situation, it's easier to fight this kind of shallow recession than, and therefore it's wise to not allow inflation to take off. I wanted to come to one additional point, looking away from the US, looking at energy again. I continue to believe that by the summer we will see a Chinese stimulus, and that could be quite a significant one. And that would sort of bounce back oil demand expectations and oil prices a little bit. And then we enter the fall with the question, is this then more than a flash in the pan? Is it sort of over? Or do we continue this step decline, which we have seen so far? But I think that there's one more piece of good news coming from China.
Right. Adi, speaking before we get to the good news, the bad news, it strikes me. I mean, I would challenge the thesis that Biden's timing is wrong or is late, because ultimately the idea of the real impact of the sanctions supposedly on Russian oil is yet to come, i.e. the second half of the year. Adi, your thoughts on the outlook, of where the Russian war in Ukraine is, and vis-a-vis where Russian oil supply yet to be disrupted, your views and outlook for that?
Yeah, I think the Russian war is drawing a bit to a stalemate. Obviously, the Ukrainians have some more sophisticated weapons and rocket systems that have been using to target the Russian ammunition dumps, and I think that's been working really well, even though it didn't sort of, we haven't seen the headlines and haven't seen the actual results in terms of soldiers on the ground making any progress. But I think,
if you take that point, just to challenge on that again, Adi, escalation ultimately is maybe good from a military point of view, but it has to be bad for a sort of economic and supply commodity point of view, no?
No, I disagree. I actually think that Ukraine needs to make some progress in order to force Russia to some sort of negotiating table. I think at the end of the day, I think it will have to be, whether we like it or not, it will have to be some negotiated outcome. As long as Russia feels superior, and as long as Russia has still something to prove, I think that the conflict will continue. So I think we need more of a stalemate, more of a sort of Russia under pressure to bring them to the negotiating table. And I think only that will be good for commodities and for the rest of the world. So I'm sorry, I've lost your other points.
The point ultimately is, what does it all mean for Russian oil flow? Because so far that has not happened. And my argument that actually Biden getting a confirmation or as a commitment by the Gulf states to ramp up production when OPEC Plus expires next month, because the Russian oil disruption is coming.
Well, I think you may have a point in Biden's visit. It is late. I think we all agree it's late, but it's better than never. I think that sort of relationship has to be sort of forged in some sort of shape or form, and I think that's a relationship that's going to be very hard to break in terms of military terms, in terms of defense commitments, in terms of supply of weapons to the region, in terms of relationship with Iran and so on and so forth. And really somebody had to sit down and talk about it, and I think they've probably done it. I think it will have a positive impact on the supply of oil. I think I always thought that the fact that Saudi Arabia, UAE, and other, well, they were the only two countries that could supply additional oil to the market was purely a political problem, not a issue of constraints. I still believe that Saudi Arabia can increase very quickly output by at least 1 million barrels a day, at least for short to medium term. So I think that will make an impact on the market. Also, I think that the Gulf countries are well aware that, having a recession in the West, particularly one if it were to be caused by shortage of fuel or energy, I think it's not going to help anyone. It's not going to help them either. And I think this sort of straightening out of relationships will certainly help.
Christoph, just picking up on your point, China outlook. I mean, we are now deep into July. The China stimulus still not emerging. We've just got the print on the Q2 GDP numbers, nearly negative in China. China is looking to be the sort of, in terms of the three global pillars of US, Europe, and China, Asia is the weak link at the moment. Where's your optimism coming from?
Well, there's no optimism. That's where it's coming from. There's no optimism. The Chinese economy is performing very poorly. The lockdowns are becoming continuously extended. And export bottlenecks and so are really prevalent everywhere. And you have the big boss who wants to have confirmed for his third term in the party Congress, October, November, insisting on the lockdown and on fighting COVID as a first priority. These are the ingredients which give rise to pessimism, and that in turn gives rise to the idea that they will give themselves the same kind of stimulus which we have seen in Europe and the US, which first of all is a monetary stimulus. Giving some money into the hands of consumers. I think if that happens, it's hard to see into China, but if that happens, it will be sometime between July and August. If the Congress is in October, November, it will have to be before then. It's quite likely that it happens. Will it be an internal Chinese affair which has not much impact on the rest of the world, or will it be the kind of boost which will boost exports into China, including raw material and oil exports into China? I think if it's just a matter of size. If it's big enough, it will boost demand for commodities and for oil, at least temporarily. The more important question is, will it work or not? And that, of course, is a complicated web, because that also depends whether in the meantime the US remains with high growth in Europe. If they go down and go into a recession at the same time, then only China boosts its economy, is less likely to work than if it can be synchronized.
On that point of weaker Europe, US, looking at Europe, Christoph, the euro declined to par with the dollar, maybe even goes lower. But do you think that's a positive for Europe, certainly for Germany, and big exporting country? Is that good or bad news? How do you read the fall in the euro vis-a-vis its impact on the macroeconomic outlook for Europe?
Given the economic situation, it has to be good news in the short term. With a caveat again, where do most of these exports go? They go into China and to some extent to the US. So it's right what you said. The global economy has these three poles, so in China, Europe, and the US. China looks the weakest. Europe certainly is now the one dependent on its export growth, and that looks weak in China and in the US. And the US, as usually, seems to be a little bit ahead of its game. But don't forget, in Europe, there is the other side to it, which is the energy crisis, which may really happen in the winter. I don't think so. I think that Russia has lost a lot of its gas exports to Europe already, and they know it's a permanent loss. It cannot be redirected anywhere, but it can be replaced permanently in Europe. And I do think that they will switch on gas deliveries to Europe again and continue sort of this pins and needles approach. I don't think that Russia will cut off the gas permanently, but as long as that shadow is over the strong Central European economies, Germany, to some extent France and Italy, as long as pessimism will prevail, the central bank will find it difficult to increase interest rates, and everything is sort of paralyzed a little bit and doesn't really move forward. I can tell you, we just came to Germany. It's a very strange situation. It's still an economy completely blocked by bottlenecks. You come to the airport, there's no information booth is filled, the trains are overcrowded, the cooling system in the food train compartment is off. You can't get a taxi. And on the other hand, there's people sort of getting close to hoarding firewood in the villages because they think maybe everything is going to be switched off. So it's
nothing to laugh at. Obviously, this is a very serious context. Adi, I wanted to get your thoughts vis-a-vis a big point that was brought up a lot over the weekend in Saudi with all the talk around energy, was the fact that the idle capacity, the spare capacity that's available in the world is dwindling down towards zero. And if Joe Biden gets his way, i.e. Saudi and UAE start ramping up, it will get to zero. Adi, with spare capacity at near zero and with 5-year averages on crude stocks near 25% below 5-year average, there's no way oil can drop below 100 under those circumstances, is there?
Yeah, there is. I haven't been terribly bullish for a little while now, and the only reason is demand. Now, let me just come back to your first point, the excess capacity. Excess capacity is very small. There's no doubt about that. But there is excess capacity. And excess capacity is there to be used in times of need. And this is why I think, this meeting between Biden and MBS in Saudi Arabia was very important. I think Saudis should step up and provide additional volumes. They can provide. I think between various OPEC countries, primarily two of them, two leaders, I think we can provide up to easily 1.5 million barrels. Yes, we'll lose excess capacity, but I disagree with those who worry about excess capacity. Excess capacity is there to be used when it's needed. So I think that the bottom line is that there is enough oil out there in the market. I think that the current worry is that the two of them, it's recession in the Western world. Just going back to your three pillars, I think at the moment Europe is looking by far the weakest out of the three pillars, because one of the reasons why euro is falling is because European Central Bank cannot increase interest rates in any way like the United States can, simply because they've got countries like Italy. They're already hurting anyway, even with the current interest rates, huge debt problems and so on and so forth. The second problem is China. I do agree with Christoph that there will be a stimulus back, and already we see some talk of some further stimulus in China. But it has to be when you have, when we have a growth of 0.4% Q2 year on year in China. That's unheard of. I mean,
that's a recession in any
7,
language.
8, 9%. Now we're talking zero here. Of course, we still expect it to be positive overall, but China is not doing very well. The other thing is that we keep forgetting the main reason why we had this biggest demand shock, probably almost ever, was that COVID is not over yet. China is a good example.
Australia.
We're not talking about it, but Australia is closing up. Europe is we're seeing in the UK here, surge of COVID. Fortunately, COVID doesn't seem to be as scary as it used to be, but the measures that people are going to take as a result, not traveling as much. Okay, we're seeing a bit of a blip, summer season. Of course, everyone's fed up, but people will. I mean, I was supposed to go to London on Monday. I won't go for a couple of reasons. One is COVID. The other one is the heat wave. People will cut on that unnecessary travel when they have to, when COVID surges again. So, and of course, the last one is the recession. I think, even though the Fed is talking about soft lending, I really think they are sort of making that picture very rosy. I think it would be very, very lucky to avoid.
Well, you can't believe a word the Fed says. I mean, ultimately, they've got it so wrong for so long. It's hard to believe that the guy's he only got reappointed.
Oh, yeah,
that's an excellent point.
It's sort of mind-boggling.
A recession when unemployment is at 3%, is very different from a recession when unemployment is at 10%.
Right.
This is always this thing about people labeling. You look out of the window, you wouldn't be able to recognize if there's a recession or not. That's for me a different situation from one where you see the guys queuing up at the corner looking for work.
Yeah. Let's go to the survey question before we get Christoph and Adi to tell us what's going to happen over the next 6 weeks while they're lying on a beach somewhere nice, hopefully. The question is, how much, it was where we started this morning, will Joe MBS fist bump deliver more oil supply from the Gulf after OPEC Plus agreement expires next month? Not from Saudi, but from the Gulf. Maybe a little, 1, yes, big time, 1+ million barrels per day, and 3, the ultimate no. So welcome the views on that. Maybe a little, yes, big time, 1+ million barrels per day extra from the Gulf after the OPEC Plus agreement expires, or no, nothing doing here. Adi, let's sort of get your views maybe on where, as you say, parting for 6 weeks or so until September. Welcome your thoughts on what the view, the outlook looks like to you in the energy markets. And I will also welcome who will be Prime Minister in September in that great country where you live.
Oh, absolutely. I can tell you all about it. Easy answers. Rishi Sunak. So let's get that out of the way.
Crikey, okay.
Other than that, well, the most competent one out there anyway.
So we'll have an Indian Prime Minister in Ireland and an Indian Prime Minister in the UK. That'll be quite unique.
Well, why not? We have quite a few CEOs in Silicon Valley as well.
Yeah.
Why not? So anyway, going back to looking forward, I think
more Indian than Chinese now.
So,
Yeah.
For the first time, no? More Indians than Chinese
Oh,
people. Also.
population-wise, yeah.
oh, population-wise, absolutely, yeah.
This year.
Right at the time we're hitting 8 billion number as well globally. So in terms of where we're going forward, I think it's very important to watch this Fed meeting. I think at the end of the month, I think it's going to be the key. I would not be surprised to see a 100 basis points or 1% increase simply based on the numbers out there. I think the Fed has to do something now that quickly. We talked about it. I don't want to go back into that, but I think inflation is a very serious problem. But of course, it's going to have a big knock-on effect on everyone else when the United States sneezes. I'm not talking about recession now. I'm just talking about purely interest rates. High interest rates are not good for commodities. So while I still see, I talk to the market still, I see the front end of the market, the balance is being still very, very tight. Dated is almost $9 over forward Brent, and Nigerian differentials are at silly numbers. We're talking about close to $10 a barrel, and well over $10 a barrel premium for escravos and these lighter and more desirable grades. I think that as you look forward, I think it's not going to be particularly good for commodities. As long as there's no surprises like Libya, I think markets sort of hovering between $100 and $110 a barrel. And the cap on that is purely going to be this big interest rate increase, which will, follow after the United States will be UK, and Europe will have to eventually to follow by at least a 0.5% or 50 basis point increase. So yes, I agree, Christoph. U.S. recession at 3% is unemployment is a different story. Unfortunately, for the rest of the world, is not the same. Especially third world countries are going to be hit very, very hard. And
Gulf oil producers, where do they go after this OPEC Plus agreement?
I think Gulf oil producers. I think after this meeting, as I said, I think this sort of restraint by Saudi Arabia, UAE, and other Gulf oil producers were purely political. We have to see. I really don't know exactly what happened behind the scenes, how the meeting with Biden went, but I think hopefully that will clear the way for them to at least say, like, okay, we've made the point. We actually had him knock on our door, come here. And then we told him how we feel, and let's move on, because this relationship, I think, is way too important to sort of hold a grudge for another year or so.
Yeah.
So I'm more positive.
Okay, let's get the survey result. Give Christoph the last word this morning. The survey result tells us ABC, 60%, maybe a little, big time, and no are sharing the rest. We'll put that up on social media now for everybody else to vote on. We'll get a sense by the end of the day. But Christoph, your thoughts and outlook over the remainder of the summer?
I think we can say a few more things. We can be a bit more precise than Adi just was. The meeting with Biden has already accomplished two things. Number one, it has moved into the public consciousness that there is excess capacity. Compare this to all this hype with all these analysts, talking about $300 oil. We are running out. We have no room to maneuver. There is spare capacity, full stop. Everybody knows it. That alone has a calming effect. Number two, it has freed to some extent, on one hand, which Biden had tied behind his back, which is Iran, right? Because no doubt part of that was the recognition that the nuclear deal may not be coming back, and that Iran is trying to sell drones to Russia, and so having the Saudis sitting there saying, yes, we can increase, relieves some of the pressure of saying, oh my God, we need to pacify Iran somehow. So restore some of the old order. I also think that generally the decline in prices, nobody buys oil to drink it. There's no intrinsic value. It's always derived demand. So people buy it to drive. And we have all said that refining margins were at world record levels of $30, $35. There's a lot when these gasoline prices can come down without any change in crude oil prices. And it will happen because refining configurations always adjust. And it's already starting to happen. And that's the reason why you see gasoline prices in the US below 4. And then finally, I would defend the Fed. I think that the current policy of going out there and saying we're going to kill off this inflationary spike, explicitly always with a reference to entrenched expectations, that we don't want a wage price spiral to take off. And it's exactly the right thing to do. And the market is sort of paying tribute to it. There's still too much money around for this to last, probably. But I think going forward into the summer, that all looks pretty good. And what we will then finally see, what we haven't discussed yet, is the energy situation. As long as the sanctions can be sustained or even hardened on Russia, you will see the situation in Russia deteriorating and grinding down. The Russian economy does not look good. The oil sanctions will get more bite despite the European Union policies if oil prices are lower. The gas sanctions, 60%, half of the 60% of gas exports, higher price to Europe, which cannot go anywhere else. Russia has already lost. It's not going to come back. Even in a crunch time winter.
Putin's threat on, basically energy Armageddon if things get worse on Russia?
Putin is like a bully in the schoolyard. He always has these big threats, and then you step right in his way, and nothing materializes. It's the same with Kaliningrad. The Lithuanian attempts to cut off big words, no action. There's nothing Russia can do if these sanctions are starting to bite. And if Russia would indeed cut gas or oil exports on their own account, they would play right in the hand of the sanctioning alliance. That would be actually the best thing which could happen to the G7 and to the NATO countries. This is economic warfare. The problem of the West is they have to realize that. And in times of war, you have costs. You need ammunition. You need to spend it. So there are costs to be incurred. If oil prices are low, these costs are lower. But if they are high, these costs are a little bit higher. It is the stamina of the West to incur these costs which will determine the outcome, not any kind of Russian action. And he's clearly, in reality, playing for time. But I'm quite hopeful that what we are seeing, in Europe, is that people, when you look at opinion polls, 70+% are quite prepared to turn the shower cold in order to stop this kind of a world, where one country attacks the next one because of some obscure ideological whatever.
Okay, well, we're going to have to wrap it up there. My 2 pennies worth are that I think the visit by Biden was always on a much bigger level. Oil, as obviously we started with and selfishly focused on because that's our space. But I think the big geopolitical position here, the announcement, if I was to grab one headline out of the week, if I was still the Middle East news editor for Bloomberg, it would be we're back. US announcing that we're back in the Middle East. We're not leaving. We've discovered a new reason to be in the Middle East, and that's the global competition between Russia and China. What had been an exhaustion about wars in Iraq and Afghanistan, and the population of the US being exhausted by that and not wanting to be in the Middle East. I think we've just moved out of that phase. We're now in a global competition phase, and the Gulf and the Middle East is a vital node in that face-off. And so that announcement, we're back, we're here, we've got your back. We will defend you. We will be your partner. What is the response from that? I think now there's a big responsibility on the Gulf states to really row in behind that and show good faith. What will that be? I voted it will be 1+ million barrels a day of excess supply coming out of the Gulf over what time period, whatever after the expiry of this agreement. And I do not agree, Rishi Sunak, or whatever the way, okay, whatever, you know what I'm saying.
Sounds good.
Rishi Sunak, I think it will be a woman who will be the next Prime Minister of the UK. Which one of them, I don't know, but I don't think it will be one of the lads. Okay, guys, have a great summer. See you all back here in September. Obviously, we're here right through the week at 10:30 every morning, but we will be without Adi and Christoph, and we'll see them at the back end of the summer. Have a great break, guys. Enjoy, don't get sunburned, and we will see you all then. Take care.
All the best.
Bye-bye. Bye, Adi.